Hello, 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 and welcome to the Just Got Paid podcast, where we're turning your paycheck into passion, purpose, and profits. I'm your host, Eric Hellon, and we actually have a great episode today. We're going to be having on a special guest, a CPA and a best-selling author, and we're talking about taxes today. As we know, it's tax season. Everybody's gearing up. If you haven't already filed your taxes, you should be filing any day now. But we're really going to answer some of the questions, common questions that we get from some of our listeners, some of our clients. And one of the biggest things that I tell all of our clients is, hey, I'm not a tax expert. You need to really go to a CPA. You need to talk to somebody who knows this stuff like the back of their hand. So this is an opportunity today to ask some questions that I got from some of our listeners directly to a licensed, trained, experienced CPA, Mr. Eric Pierre. So let's go ahead and bring him in. Mr. Pierre, how you doing, sir?
I'm doing great. How are you doing?
Man, I'm blessed. I'm just happy to be here, and I appreciate you jumping on with us today. I know you're a busy man, but I really wanted to start out this podcast really just kind of getting some background on yourself, your education, and how you got into this field.
Okay, that's great. So, as you know, my name is Eric Pierre. Um, I'm the CEO owner of Pierre Tax and Wealth Management LLC. We do business as Pierre Accounting. I have been a licensed CPA for 19 years next month. I've been in business myself for 9 years now, full time. How I got into this is pretty simple. You know, I loved basketball growing up. I was playing in my backyard one day. My dad said in high school, hey, you know what? I'm not getting any letters from Dean Smith, Roy Williams, Jim Herrick. David Stern was the NBA commissioner at the time. So, in case this basketball thing doesn't work out, you may want to have a fallback. So, my dad's a CPA. I researched accounting. I saw it as recession proof, and I'm good with numbers. So, that's the route that I chose. So, that's how I got here.
That's awesome, man. Yeah, it's one of those things, and I know you definitely have the height and the experience. I'd love to hear a little bit more about the basketball direction because I know you also have a podcast, and we'll hopefully get some time to jump into that as well. But when you mentioned recession proof, that really stands out to me because oftentimes, some of our clients they're thinking about career choices. They're coming out of college and they're trying to figure out which direction they should go. And I'm in real estate, so of course we have this impact of what the economy is doing, and it really dictates the market. So when your dad was in the business, he gives you this direction and says, hey, this might be a field for you. Recession proof is one thing. Have you found that building your own business as compared to, because as a CPA, you can go work for a larger organization, having your own business. What have been some of like the learning lessons early on to help you succeed in running your own business as a CPA?
God used three or four people to tell me I should be in business myself. I'm not somebody that fits in a corporate environment. I'm not somebody that I don't like being told how to fit in because of my personality, my mindset. And I had situations where oftentimes I was doing the work of three or four people, not getting paid for it. So I mentioned that at the beginning of my book, The Great Tax Escape. And that's one of my regrets is not starting out my own a decade earlier. Um, as for career choices, the best thing I can say, one, you should pray about, ask the Lord, but then whatever you're passionate about, that's where you should be headed. And if you focus on your passion and improving your craft, then the money will come. Too often I see people doing careers just for money. And then it shows in your interactions and it shows in the level of effort that you give. So find your passion and follow it and believe in it. You have to be prepared to do the hard. Running a business is not easy. And a lot of times, especially if you're going to hire people, you have to make sure they're paid before you're paid. That's one of the difficult things about being in business for yourself.
That's a great point. I mean, there's a lot of sacrifices, that are made, and I think most people they get into the business, like you say, you don't like to be told, and they feel like, hey, I don't want a boss. And then you get into business and you realize you have multiple bosses because you have multiple clients. And so, just trying to figure out what's best for you and your personality type. I think that's some great advice. And especially, going after a career that you're truly passionate about, something that we talk about a lot, because at the end of the day, if you don't enjoy what you're doing, you're gonna come to regret the money, to be honest with you, and it's just really not gonna have much effect on your success anymore. So I appreciate that advice. Let's dive into some of these questions because we got some great questions that I definitely want to cover. Some of them are coming from our audience, and so I want to just kind of jump right into it and start with the basics. There's a lot of confusion, there's a lot of talk about taxes and things of that nature, but can you just give us like an overview, like what are taxes, personal taxes? Why does it have such a negative connotation to most people?
All right. Before I answer that question, I do want to correct you one thing about having multiple bosses. Like, if you view it that way, you shouldn't be in business yourself. You should not be in business, period. Your clients you should have more of a partnership relationship and not boss. If you have that mindset, then basically you're trading one job for another. So I just want to say that real quick. And that helps because you want to have good relationships. I have great relationships with my clients. I just flew to the Bay Area and took a client to a Warriors game where we sat 5 rows from the court. So those, you want to have impactful relationships with your clientele. If you view them as your boss, you're setting yourself to have acrimonious relationships. And as for taxes, I just to make sure I understand your question, our tax code requires us to pay taxes federally, and then depending on your state, you may have state income tax. So in California, you have state income tax. New York, most of the states do have that. States like Texas and Florida do not. The reason it's got a negative connotation because, quite frankly, it's the biggest expense that you're going to have in your life, and you're guaranteed to have to face that expense. And it's also frustrating because a lot of people don't plan for it. They're afraid to plan on taxes for various reasons. One, they think it takes a lot of time, even though studies show that people on average spend 18 hours to plan a vacation because of the dopamine hit, and it's costing you, depending on the size of your family where you go, anywhere from $3,000, $8,000 and up, versus you spend a couple hours a year in tax planning. You could save, depending on your income bracket, if you're in the 7-figure, you can end up saving millions of dollars with 5 hours worth of work with a good tax professional.
That's a great point. I mean, yeah, people are oftentimes concerned about the wrong things, right? And it's not only just the money that you spend on the vacation, it's the opportunity cost that's lost from that money too. And so, looking at, like you said, you're guaranteed to have taxes. They say very few things are guaranteed in life other than taxes and death. And so, sure, you should be spending some time to really analyze and see how can you save more. And I think it kind of leads into another question where people are often confused, or they get maybe a little bit afraid. They don't want to, do too much or get to a point where you have tax evasion, versus a true tax strategy. And so maybe you can talk a little bit about that. Like, how do you know when you've gone too far or, you're doing too much against the tax code, and you kind of lean into tax evasion instead of having a strategy?
Well, first of all, tax evasion is illegal, but tax avoidance is legal. Judge Leonard said that any citizen can basically arrange their affairs to pay as little tax as possible. I believe in that hearing he said that if you want to avoid a toll and drive around to avoid it, it may take you longer, but you have the right to do that. So, I think just a lot of people are afraid of getting in the crosshairs of the IRS. But the thing I will say is that people remember that what is considered a single most voluminous book is the King James Bible, and the tax code has at least 40% more words than that. So it's your responsibility to figure out where in the code you have those tax breaks, particularly for business owners. So that I say that. Also, if you're going to do tax strategy and you're going to work with a tax strategist, whether it's myself or your tax professional, you should always ask to have them show you where that says in the code, and can it stand up to, how has it stood up, whether it's through tax opinions or it's codified word for word, like certain tax deductions are codified explicitly. And so if that can't be supported, you shouldn't do it.
Yeah, that's a great point. Great tip there. Yeah, if somebody's giving you some advice, can they show you an example and make sure that you're protected? So, great advice there. And I know, as we talk to a lot of folks who, work full time and they're trying to really reduce the amount of taxes, but then some people really celebrate when they get like a personal income tax, large refund when they do file their taxes. And so we've heard, like, hey, getting a big tax refund is not necessarily a good thing because you've kind of given your money to the government all year. Can you explain, from your perspective, should we be looking for the largest refund or should we be trying to break even or even just pay the IRS what we owe at the end of the year?
It's a great question. My personal stance is that you should look to break even because when you have these large refunds, you're giving the government interest-free money. However, there are certain credits that are refundable that doesn't matter on your planning, such as the child tax credit and some of the working credits. So some of those credits are refundable, and it doesn't matter on your withholding if you get a refund. Some of the refunds get larger because if you're a married filing joint, you have 5 kids, and you meet the income requirement of getting so many credits per kid, you can end up getting $8,000 to $10,000 or some of the EITC. And so those kind of things are hard to plan for. But overall, for most Americans, particularly the wealthier ones, you don't want to get into a situation of a refund because, again, if you get a $10,000 refund, for instance, you could have invested that $10,000 and made, an extra 1 to 2 in a high interest bank account in a year. And even if you invest in 10%, it doubles in 7 years. So you're losing the ability to make money because the government doesn't give you interest on a regular income tax refund unless they process it way too long. So unless you have that situation, it's not good to necessarily have a tax refund. But there are situations like R&D tax credits can generate refunds through massive deductions. You can also get refunds through cost segregation. So it just depends. But but if you plan ahead of time, you can figure out how to experience some of the savings right away. With some of my high net worth clients who are highly paid W-2, we start their planning second half of the year, and so by September they make a decision. They start withholding less money, and so they get some of their tax savings right away, and then they may end up cutting a small check, but they've kept an extra, you know, one, two, 300,000 or more, or even millions of dollars.
That's interesting. So you kind of have the conversation later in the year, and I think for most people who are getting their paycheck and they're trying to figure out, okay, I see the deduction from every pay stub. How do I figure out how to keep more of my own money? Do they, from your advice, it sounds like you're saying kind of look at that later in the year as opposed to the beginning of the year. Does that make sense?
You should look at it starting in June, and you should work with a tax professional because, you know, you have to be able to tell a tax professional what is your goal and what do you plan on. There are many ways to lower your tax, particularly once you get to 500,000 and up of taxable income. But then, for instance, are you more charitable based, or do you want to use assets? Because basically, the two ways to lower tax is going to be either charitable, but then you lose control of the money, or through transactions. But either way, you can significantly lower your tax. But you have to decide which way to go, and that's a conversation you have with your tax pro. That's not something I would tell people what to do, but that's basically two paths of doing it.
That's interesting. So yeah, I imagine there's probably a lot of people listening who would love to get their income to that point, and it's just like, okay, for majority of folks who are making, say, 50 to 60, $70,000 a year, what are their options? What can they do? And I think it sounds like just at least starting with a conversation with a tax professional like yourself to figure out, what are ways that they can start to, hopefully pay less in taxes. Because I know your book mentions, is specifically saying how to make more money and pay less taxes. So from somebody who's maybe starting out 60, 70, $80,000 a year, are there any simple like first steps that they can take aside from obviously reaching out to you and having that conversation?
Well, I would also, work with a financial advisor and look at how to get self-directed, retirement accounts so you can use it to invest in assets since that grows faster. But I also want to let you know, like, for those of you that are, starting out and you're like, oh, I only make 50, 60,000 a year, just know that this past year, the United States had, 500,000 new millionaires. So somebody's able to increase their income. Why can't it be you? But if you look at yourself like, oh, I only make this, well, then you're never going to get anywhere. So the first thing I would also suggest, make sure you work, do things to work on your mindset. Scripture says renew your mind daily. And the reason I can share that is that, I learned from Dr. I think his name is Dr. Daniel Amen, that human beings are conditioned to think negatively. Every day when you wake up, 75% of your thoughts are automatically negative because we're conditioned just to focus on survival instead of abundance. So I'd also work on your mindset. It's not easy, but that's why you have to work on it daily.
Great point. Yeah, Dr. Amin is awesome. So definitely right there with you on that. So it definitely starts with mindset, and then you kind of get into, like you said, having some direction and having a plan as to what you want to accomplish. I think that is all part of it. And definitely, I would second that, starting with your mindset for sure. I want to talk a little bit about your book. Obviously not every CPA has written a book. And so I just kind of want to get an understanding as to what made you want to write a book. Talk a little bit about what the book addresses and who it's tailored for.
A year ago this time, I had, left a partnership that was focused on employee retention credit. And I didn't know exactly where I wanted to take my firm. So I heard a presentation about writing a book. And so I was feeling a lean towards, high net worth, higher taxpayers. And so it made sense that I wrote the book, The Great Tax Escape, and it was used as a marketing piece. And so the beginning of the book, we have two very influential Americans that are clients of mine that, gave a shout out or acknowledgement. And then we get into it, right? And so basically the purpose of the book was to help people understand that the tax code is available to help lower your tax, number one. And it's at your responsibility to find someone to help you. And then we let people know that a lot of tax professionals don't give that advice for basically a couple of reasons. First, a lot of CPAs or tax professionals they tend to have more of a, and be careful how I say this, they tend to be more liberal minded, and they feel that the more money you make, you should be paying more tax to be a good citizen. But the fact is, the tax code gives a lot of tax breaks available. And part of the issue is that, I don't mention this book, but just to give you insight, a lot of tax professionals don't make a lot of money. So very few boutique firms make more than $200,000 in gross revenue. So when you think about that, most people are CPAs or tax pros because they love the profession. We don't treat the industry as a way, as an incubator, and there's not a lot of entrepreneurial minded tax professionals. So that's the first thing. And then second, a lot of tax professionals get caught up on focusing just on compliance. They tend to have smaller teams, or they're overwhelmed, they're not properly staffed, so they don't make the time to learn about advanced strategies. So, in the book, we show quotes from well-known tax professionals that, knock wealthy people, including some tax pros that you may be familiar with. They put it on Twitter, so we went ahead and posted it. And so just want to give people, particularly, that audience of 500,000 more, that there's a better way, because when you start making that money, if you live in California, you're paying between combined federal and state 200,000, but you can get your tax down to 80,000. And to show people that you don't have to be a Jeff Bezos, Mark Zuckerberg or Damon John or LeBron James to access these tax strategies is just a question of getting in front of the right people that know it. And that's why I wrote the book.
That's awesome. Yeah. And, we talk a lot about, W-2s versus, being an entrepreneur. And one of the biggest things that is often brought up by folks who want to start their own business is like, hey, I'm paying all these taxes. I want to have some write offs, right? And we know that oftentimes, well, we know the statistics on new businesses, most of them don't survive. But even to figure out, how are you profitable? And you mentioned, CPAs, even boutique offices aren't that profitable. And so if somebody is working, they're 9 to 5, and they're like, hey, I want to get some type of additional tax breaks. I want to start a side hustle. I want to start a business or something like that. Is it truly going to give them the breaks that they're looking for? And I know every situation is going to be different, but would you advise somebody who's making, say, 500,000, and sure they own real estate and they're giving, but they're trying to figure out a way that, hey, I want to start, a business or, my own thing, is it going to be beneficial? Does it does it outweigh the cost of actually running the business?
You have to do an analysis because for everybody that's different. But if you're making 500,000 up, the first thing you need to do is find a tax strategist to lower your tax. So I think that'd be the first thing. And then, you have to decide what you want, right? And basically, if you don't have a vision, you're and a plan, you're destined to fail. So, there's all kinds of things. Like, for instance, if you're interested in having a side hustle, one side hustle that does give a lot of tax breaks to wealthier people is the short-term rental, where you're not capped on the suspended passive losses. But you have to decide if it's worth the headache for you to get into, commercial real estate like that.
Yeah, so and I think that's kind of the advice that we give to a lot of folks is like, you realize that every business is going to have its own, you know, not necessarily struggles, but just things that you have to take care of, and especially as you start to hire people and deal with payroll taxes and things of that nature, there's no free ride. And so you have to figure out if you're truly starting the business because you're trying to meet a need versus trying to get a tax break. So definitely agree with you there. If somebody were to start their own business, like what are normal standard type of deductions? Like say they're just operating out of their house. What are some of the things that they could potentially write off as a business owner?
You can get a home office deduction. You can write off like some of your cell phone, a portion of your internet. And then, the difficult thing with being home based is that if you're not somebody that has meetings outside to meet clients and you work all your interactions are electronic, such as Zoom or mediums like this, then writing off your vehicle is going to be very difficult because you can't just buy a G-Wagon or, a Maybach and then you're not actually driving anywhere for business. So, but those are just a few examples.
So yeah, if you're working from home, obviously your cell phone portion of your mortgage. I don't know if does that count for rent as well? So if you're renting, could you write off like a portion of your rent too?
Yes, you can write off a portion of your rent. Yeah.
Oh, okay. So yeah, I wanted to make sure that that was clear because, we talked to a lot of folks who are trying to transition from renting to owning. But again, trying to figure out how to, make more money. So that's where the side hustle comes from and trying to figure out what taxes they can write off then as well. So if we talked about mindset and I kind of want to jump back into that because oftentimes people are, they're working paycheck to paycheck and they have a mindset of, hey, I'm just trying to survive. I'm just trying to make it. How do you go from that mindset to like, okay, I need to learn how to build wealth, and using the tax code and using, tax strategies? How do you make that jump or that transition?
First of all, I would definitely pray. Jesus said, count the cost before you build something. So I'd count the cost. That's one thing. And then if you're married, you should definitely consult with your spouse. And the other thing is that you have to be willing to figure out what you're willing to risk. And everybody's risk tolerance is different. So that's probably the general advice I'd give on that is also figure out, your risk profile, your risk appetite. Are you, some people are willing to quit their job and risk it all, start in business and figure out. Some people need time to, transition to it little by little, but that's something you have to figure out. But at some point, if you're going to be in business for yourself, you will have to have some sort of exit. And so then if you're currently working a job and you're looking to start your own business, then also figure out that, do you have enough to save to live off if it takes, a year or two to take off? Because you mentioned earlier, 90% of businesses fail in year one, 50% after year three. So the goal is to make it past year three. And then are you set up financially to weather the storm?
Yeah, that's absolutely great advice. Because yeah, I mean, that's the mindset thing. Like you said, I'm definitely I'm starting with prayer number one, and I think also too it's kind of getting around other individuals, other mentors who, can change your sphere. Because sometimes if you're going from being an employee, oftentimes you're hanging out with other employees and it's a different mindset when you're starting a business, when you're running a business. And so coming into a new circle, networking and getting around individuals who are like-minded is vital. And that does lead to your success because now you have exposure. You're exposed to other people who have been in business for a long time, who have been successful, individuals like yourself who are now authors and they're CPAs and they can advise you as a client, once you become a client that, hey, here's how you do it. Here's what you're doing right. Here's what, you can probably make these changes and you'll be doing a lot better. And so definitely, when I have those conversations, it's like, hey, who's around you? Who are you surrounded by? And so that definitely plays into it. I don't want to take too much of your time, and I appreciate you jumping on this podcast for us. I think one of the last questions that we got was really about cost. A lot of people are afraid to talk to a professional because they don't know what it's going to cost them. They think, oh, I'm gonna go to an H&R Block or whatever the case may be, because it's they're publishing and they're advertising that, oh, it's free or it's very low cost. Like, what are expected costs if somebody were to like reach out to a professional? Are they expected to pay an hourly? Is there a retainer? Like, how does that process work? Because I kind of want to demystify that for a lot of folks.
I was pausing to think about this question, and I was reflecting because the cost issue. The problem is in the industry of tax. There's not a set price. Okay, so for instance, realtors, there's usually a set defined range for commission, right? Lenders have a set rate. Wealth managers have a set rate. When it comes to tax pros, CPAs, enrolled agents, sort of, I believe you're in California, so the C-tax, that varies. And so I'll say this: just because someone charges a lot doesn't necessarily mean they're good at what they do. But I will definitely say that somebody that charges very cheap, that is a big red flag. Um, if you just have a basic 1040 and you just want a tax pro, then yeah, go to Jackson Hewitt, go to H&R Block. But if you have a decent sized home, you want to work with some level of tax professional. If your taxes aren't that robust, then you can still go on a lower cost. But then once you have a business, then you should work with a very seasoned tax professional. And those kind of returns, if you have a business, I'll say this generally: if you have a business and a personal return, you should be looking at the low end $2,000 to $3,000 a year just for the preparation. Just to be honest. And the thing is, I know people always say like, "Oh, that's too expensive" and all that, but I'll challenge you to think this: look at your checkbook. Well, I'm a little older. Look at your bank statement because we don't use checkbooks to track our money anymore. Look at your bank statement. Look at your credit card statements. Most people spend 10 times that easily hanging out, spending time and money in places that go nowhere. And I'm not against going out. I hang out sometimes. You saw me at the Warriors game with my client, but that was actually a business meeting. Um, if you're going to be in business, one of the things you really have to function like an adult and prioritize your spending. But if you want for a good business, good business return should cost you at least $2,000 and up. And when you compound it individual, I would say you're going to spend about $3,000 a year. And then if you have multiple businesses, K1s, or your higher income, then you may be spending four or five and up. And so unfortunately, I can't give you a set number. But if you have a business, like an S corporation or partnership, they're charging you $500. It's going to be crappy work.
No, that definitely helps, and I totally get it. There's no set fee, and I'm sure even you know you got to have somebody who's got knowledge of your own state income taxes, of course, but trying to work with somebody that you can trust, who's going to get the job done. Like you said, the last thing you want to do is pay a lot of money for somebody who's not doing a good job. And so just trying to get a ballpark, like you said, if it's, you're running a business and it's $3,000 to $5,000 a year, that can be your expected expenses for the year, to take care of your needs. And so that kind of will help a lot of our audience, because just not knowing and trying to make that jump from just your 1040 to now running a business, you're going to have to consider those additional costs to make sure that your taxes are done correctly. So definitely appreciate that. Before we go, I want to leave with, how do people reach out to you? How do they get your book? What's the best way to reach you? Because I want our audience to be able to touch base and reach out if they have questions or they need your services. So what's the best way to reach you? And then also, of course, grab your book.
Okay, the best way to reach me, if you go to my firm's website, pierreaccounting.com, we have a contact form. You can submit it. We respond in 24, 48 hours, probably close to 48 right now with tax season. As for the book, you can either go type in The Great Tax Escape by Eric Pierre on Amazon, or you can get a free e-copy. If you go to greattaxescape.com, there's a link where you can download the book for free.
Well, hey, again, I appreciate your time. I'm definitely, I want to honor your time. And I think the information, the advice, the tips, the mindset, all this is part of that process of understanding taxes, understand that we shouldn't be afraid of them, and that the tax code is available to all of us, like you said. And so, I really appreciate you jumping on here. I think for the most part, as people watch this episode, I know they're coming with their own questions, and they want to know that, taxes everybody has to pay them, but there's ways for you to use strategies so you pay less. Like your book says, how to earn more and pay less in taxes. I think that's really the goal. And so that should be anybody's goal. So if you have questions, you're listening to this episode and you want to reach out to Eric, definitely do so. Touch base with him and his accounting firm, and get the ball rolling so you can start to figure these things out. Don't be afraid to ask these questions, because they're necessary. So I really appreciate you listening in or watching wherever you may be for this episode. I hope that this episode was valuable to you, and I look forward to seeing you on the next one. Until then, be blessed.